Good morning and welcome to the Gold, Ghosts, and Guns market report for Sunday, January 12th, 2020. We've got a lot to talk about. I don't have a lot of introductory remarks. I want to get right to it because most of my introductory remarks would be about the man whom we found out died of a 3.5-year battle with brain cancer. Unfortunately, the same brain cancer that killed John McCain, and glioblastoma, and that's, of course, the great Neil Peart. I'm not even going to talk about him the way everybody else would. He's a drummer from the band Rush, yada yada. No, he's Neil Peart. And Neil Peart, I don't know if you guys truly understand how important he was to me. And not just him, but the other members of the band. Because there's a couple of things here. One, music is intensely personal. Like a religion, like anything else. Music is incredibly personal. Rush entered my life at the exact right moment. I had just started to learn how to play the bass. My friends introduced me to YYZ, the live version on Exit Stage Left. And I was just like, dude, I need to know how to do this, right? It just went from there. Because at that moment in time, I didn't have very good ways of communicating. I didn't have a home life that really encouraged that kind of thing, believe it or not. In a house full of alpha personalities, when you're the youngest, you do a lot of listening because no one's really listening to what you have to say. That being said, that guy and this picture that I have up here, note the body language, note the humility, note everything about this. This is Neil at the top of his game, sitting down and having a discussion of an interview with the man who helped rebuild his playing in the mid 1990s, when he was literally considered the greatest drummer of all time, which is nonsense, and he would be the first one to tell you that that was nonsense. Because the guy he's sitting there learning from, he would have felt was a better drummer than him. Neil was maybe the best arena rock drummer ever. He was the rock's answer to Buddy Rich, who was also in the big band era, the showman of showmans. He understood that, and for an intensely quiet and shy and person with tremendous social anxiety, which is very evident whenever you watch an interview with him. To overcome that in order to do what was more important to him than succumbing to his personal anxieties is, it's kind of life affirming. It reminds you that life is hard, but you can overcome that with hard work, diligence, attention to detail, attention to craft, and most importantly, humility. This picture reminds you that no matter how much success you've achieved in your life, you can always improve and get better at what you do. Because if you don't constantly take that opportunity at every measure to get better at what you do, why are you here? What are you doing? And so that is what Neil meant to me. It wasn't just that he was a brilliant drummer and a brilliant musician. As his bandmate Geddy Lee once said, "Dude, you're the only guy I know that practices to practice." Meaning that Neil would rehearse for months and work up his chops before they would even move into rehearsals to go on tour, to get their chops up to go on tour before they went on tour. So Neil would start preparing to rehearse because he didn't want to waste his bandmates' time to then be able to go on tour. This is the kind of man he was. I think that that's a lesson for all of us. That's the kind of person we aspire to. And at the end of the day, fame isn't important. Money isn't important. What's important is what you leave behind, right? And I remember, and I'm not often proud of what I write. Most of it is just an exercise in trying to get better for the next thing you write. But every once in a while, you have that moment where it all comes together and it's all good. And at the end of my eulogy for Justin Raimondo, I think I nailed something, one of my little moments of brilliance, which is to you live a life of consequence, you leave a life of significance. All right, let's talk about Merkel and her visit to Moscow with Vladimir Putin yesterday. I don't have a lot to say about this at this point, but it's something we have to make note of. The timing here is not coincidental or anything along those lines. This meeting was not on the schedule. Okay, it was fomented by Trump's escalation of events with Iran. It just is. And we can talk about whether or not what we saw in yesterday's headlines as to whether or not, Trump killed Soleimani in order to secure the Republicans' votes in the Senate. I can sit here and bust my hand, patting myself on the back for that all I want. I don't know how much of that is true, how much of it isn't, how much of it's, I don't know. We'll see. Okay. The truth of the matter is that Merkel going to visit Putin in Moscow while the U.S. continues to put sanctions on to try and stop Nord Stream 2, to try and build a new coalition of the willing to back his increased pressure on Iran. Merkel went over there and said nuts to all that. We want a different relationship. We want a different world. We want a different foreign policy for Europe. We want normalized relationships with Russia. We want the JCPOA reinstated, as flawed as it may or may not be. We want this over and done with because we're tired of bearing the burden and bearing the brunt of your Rambo without a jockstrap foreign policy. And if Trump and Pompeo and the rest of them don't get that message, we're going to lose Germany and France and the rest of the EU forever. From that perspective. And that's what I said in my article on Friday. I have more verbiage on that in this month's newsletter. Now, as a matter of fact, when I get done with this, I have to start the edits on that article because there is significant tonal disagreements between myself and my editorial partner on this particular issue. He's much more of an Iran hawk than I am, which brings good editorial balance. So, Merkel's visit to Moscow is a harbinger of what's coming over the course of the next 6 months during the next phase of this, where I think the United States, and with their poodle and 10 Downing Street, are going to push harder. There's going to be even bigger disinformation campaign thrown at Americans to try and keep them on board with this, to try and keep them in the war frenzy and the rah-rah America. We just, that's going to happen here as Trump tries to fire up his base and shore up the hard base while losing the center. And that hard base, that hard pro-war base, that hard pro-America base has morphed into a pro-war base, and therefore is going to try and shame the rest of us into not being anti-war at such a critical time. You're going to hear a lot of that. It's already started, and it's frankly bullshit. It is important now, more important now, to let everybody know no one is blameless here. Iran, Trump, us, Europe, Iraq, Saudis, everyone. Everybody it was Israel. Everybody is dirty here. Everybody is a murderer or murderer by proxy. That's what war is. That's my moral stance. And at some point, we either sit down and talk about it and accept the fact that we're not all as brilliant as we think we are, and start cutting some damn deals, or things are going to devolve from here. the oil markets fundamentally believe that we are past the worst of it. I'm going to show you the chart of oil this week. I think the weekly chart of oil tells you everything you need to know. I got some real detailed look at the price chart of oil, and with Friday's close, it's really obvious what's about to happen. So we're going to talk about that. We're going to in a few minutes, and I got some little final comments before we get to the rest of the charts, which I'll talk about as well. But I was asked by one of our patrons last night to discuss Bitcoin directly in relation to the potential for a major rally into the halvening. Now, for those of you who don't understand what that is, Bitcoin, every so many blocks, which happen, and a block is confirmed every 10 minutes, so every so often, the amount of Bitcoin, new Bitcoins are generated with each new block that is that's confirmed, and the people who mine the blocks get a small reward. This is how new Bitcoins are seeded into the marketplace. Well, that reward halves every so often. It's about every 4 years. It's every so many blocks. I can't remember the number of blocks off the top of my head, but it's about every 4 years. And so we're going to see the next halvening in May, sometime around in late May. Interestingly, sometime around International Rush Day, May 24th. I think it's actually scheduled for the 23rd, but hey, let's just go with that. So, an International Rush Day, by the way, is not an official thing. It's an official thing amongst Rush fans. So when the halvening happens, the amount of new Bitcoin that will come into the marketplace, the supply of new Bitcoins, or the flow of new Bitcoins into the marketplace, will halve significantly. Now, I did about 6 months ago, I want to say, there's an earlier issue of Gold, Goats, and Guns, and I'll put a link to that to that issue in the post for this, because if you're a fan and you're still on the $4 plan and you're interested in what I had to say about Bitcoin and the halvening, we go back to that article in the newsletter from a few months ago, and I'll make that link available again. I'll make that link available in the show notes. Discussing stock versus flow and Dr. Safedin Moose's theory about stock versus flow of new money. And Bitcoin, like gold, has an ever-increasing or an ever-decreasing stock-to-flow ratio, meaning that the amount of new Bitcoins coming into existence, the amount of new gold that comes into existence versus the actual stock, the built-up stock of them, is lowering by the day. The effective inflation rate versus the existing stock of it is falling rapidly. And currencies that have commodities that have a low stock to flow ratio have very little monetary character, meaning though the ones that are not saved and hoarded have a very low stock to flow ratio and therefore can't act as a store of value because the market doesn't value them that way. Stock to flow ratio is a way of kind of measuring store of value, okay, and putting a quantitative number on the monetary character of an asset, of a commodity, okay. Oil is for example, oil would be a terrible currency because all the oil that we produce, we consume, so none of it's saved. And what little of it is saved is nothing compared to the amount that we produce on a daily basis, right? And so therefore, its stock to flow ratio is more like a flow to stock ratio. It's actually an inverse relationship, right? So that's why it's a terrible currency. It's why silver is becoming less of a monetary metal as time goes along, because people are finding more uses for silver that compete with it as a monetary or a savings asset. And therefore, silver is not as strong as a store of value as it used to be. It's now much more susceptible to the vagaries of its commodity character, supply and demand. just like oil, just like copper, just like tin, just like lead. It's not there yet. It's not as bad as copper or tin or lead, but within this next monetary cycle, it will be. So, those of us who are, and I warned about this previously about silver, that I think it's got one last hurrah and then it becomes a commodity metal because it's honestly just too useful in an industrial sense. There's just too many good uses for silver and it's no longer necessary. Money is becoming electronic. At a certain level, gold is going to wind up losing its monetary character at some point. Maybe. We'll see. I mean, it's the way of things. We have to be willing to evolve not only our thinking about ourselves and our politics and our ability to, and what we do on a daily basis in order to continually reinvent ourselves. As monetary theorists, we have to continually reinvent ourselves. We have to constantly get better and work at understanding things and how the universe works just a little bit better. Because if we do that, it keeps our analysis relevant and keeps our decision-making more informed in the long run. Again, that's what this is all about. And again, I learned from the best. It's just that simple. You want to know where this stuff comes from? It's that guy. All right? It just is. It's guys like him. It's guys like Bill Bruford. It's guys like freaking Murray Rothbard and the man I talked to on Friday, Lou Rockwell. And it comes from all of those people that continually work harder to be better. And, adversity is the mother of great things, right? So, all right, let's get to the charts and I'll get you out of here. I'm going to speak about what I think about the halvening and when we get to the Bitcoin chart, but I wanted to let you know that this is what informs my thoughts about the halvening. Okay, so gold. With the cessation of hostilities or the pause in hostilities between the United States and Iran, it's no shock that we got a blow off top in gold here. I'm not surprised by this. This is the Tuesday night high, and then we corrected down during Trump's speech. We were trading, right after Trump's speech, gold corrected into the 1540s. But to my surprise, to be honest with you, we closed strong on Friday. And the close here is actually really quite good because it's actually the highest weekly close or highest week. It's higher than last year's high. Now, the previous week was the highest weekly close since the 2013 breakdown, but we got follow through this week to the upside. No violation to the downside here on massive volatility. And we didn't close within the confines of this bar. We closed up here. All things considered, given the drama of this week's events and the way gold closed or traded, on Friday, this is a significant close above that level, above that high. It's not significant in a long-term sense, but right now it's significant. This establishes a new high. I don't know that it's going to break through it again, but it could bias this area to the upside so that when we do get a correction in gold, because I do believe that the dollar is going to start strengthening from here, and I'll show you why in a minute. And I do believe that we are that this is our catalyst for, an acceleration of the repo crisis, the unrest in Europe, Brexit's on the table in a couple of weeks, blah, 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 blah. All these things are coming to a head. Dollar demand is going to go through the roof. People are rightly freaked out about what's going on here. And the United States doesn't look like it's going to stop trying to put pressure on people, stop flaunting and flagrantly violating international law, yada, yada, yada. Okay? The Iraqis told us to leave. We said, no, we're a force for good and we're staying. Okay, well, now you're an occupation force. I mean, again, this is something that my editor agrees with, my partner disagrees with me about because it's only 5,000 troops. So de facto, no. De jure, yes. All depends on how you want to look at things, right? So whatever, it's fine. I want you to understand it from that perspective. Every time we do something like this, we're just making people more angry with us. We're just making people more distrustful of us. At a minimum level, people are becoming more distrustful of the United States intentions wherever we are. This is happening in Europe. It's happening in Africa. It's happening all across the Middle East. Okay? And it doesn't matter. I'm not laying this on Trump. Okay? Because I don't think Trump's fully in charge of any of this. I think Trump is reacting to circumstances both domestically and externally. I think, I think there's some truth to the notion that he killed Soleimani to keep the Republicans on side during the impeachment trial. I don't doubt that. That's been my thesis for weeks. But at the same time, I'm willing to remain somewhat skeptical. I'm 75-25, thinking that, they're blackmailing Trump with removal from office. It may be deeper than that, maybe higher than that, maybe 90-10, maybe real. But let's keep our skepticism at least somewhat healthy, just to keep our options open and our analysis clear. That's the point of hedging on this. Okay? Deep down, my spidey sense, I think they're blackmailing him. There you go. All right. So gold closing up here, very significant, because what it's saying is that there's international demand for gold, and this time is real. We're getting safe haven move in gold, even if the dollar is starting to get off the floor. All right. So now Bitcoin. If we get a move in January that holds above this level, and this is the Bitcoin investing.com aggregate index, not any one particular exchange. Remember, right? So we use the cash price for gold, not the futures price, and we use and then for all cryptocurrencies, investing.com publishes an index of all the exchanges and gets an average price. However they do it, I don't know, but it's the best thing we can get to a full market price across the distributed network of crypto exchanges that are out there, right? Okay. So now so we've gotten a breakout on Bitcoin above, that 7650 area I was talking about. The actual number for December was 7702, at least as far as unless I've got some artifact data in my spreadsheet. But 7650, 7602, 7702, this area here. We want to see above 7750, to be honest with you. Bitcoin's so volatile that you want to see, for Bitcoin, I always want to see a significant move above the actual high, 1% or so, 0.5%, 1%, close above that. Because anything less than that gets a little hinky. Okay? So, because it's not a very professional market. All right? So this breakout to the upside here could be the start of Bitcoin starting to see its full pricing in of the upcoming halving. And that all this is resetting the market and allowing institutional players to come in here and start accumulating, knowing full well that Bitcoin's going to 25 grand. Now, there was an article on Zero Hedge which prompted the suggestion or the question from the patron. And I think the analyst quoted in that article is from Zero Hedge. I think he's not getting it right. I think he's way too conservative. From here, Bitcoin at a minimum breaks to a new high, all-time high, or I think it's done. And I don't think it's done. So I think we see a move here that ends in a move to 30,000, 25, 30,000. I think the stock to flow ratio, well, it's published in the newsletter. I can't remember what the number is off the top of my head of what the number could be or should be based on, historical norms of such numbers. And if that's the case, then the number could be significantly higher than that. But I'm going to go for 25 to 30,000 on the next run up. But again, this has to hold here, right? The quarterly close for Bitcoin here wasn't great. All right. Q3, Q4, Q3 didn't wipe out the gains in Q2, didn't get any kind of reversal signal at a quarterly level because this is Q2. This is the breakout. This is a bullish reversal signal on the quarterly basis here for Bitcoin. All right. Because this was a quarterly reversal. Actually, it wasn't. This was actually the quarterly chart for Bitcoin is actually really quite still very bullish. It's never actually turned bearish. It's just that the moves are so big that it's hard to see when you look at it from a weekly or monthly perspective. But this is not a very particularly strong monthly downtrend, right? It took 5 bars to close below this low. This is not a particularly strong downtrend. So it's not surprising that Bitcoin held up in this region given the size of this move, right? And the fact that we didn't break down below this low immediately, which would have caused it to probably crash back down towards 1,000. We didn't get that, so we got to crash down to about 6,500, and now we're looking at possibly moving higher. We have to hold above 7,700, 7,750 through the end of the month in order to say that something else is happening here. This is a one-bar reversal as it stands right now through the first 12 trading days of the month. Okay? And so, if the halving is starting to be priced in, that's your peak from the last halving, from the last cycle. What's your peak over the next 4 years based on that number? I can tell you that the relationship between stock to flow ratio and price is not linear. It's simply not linear. All right. And there we go. So that's where I think we are. The miners need to see above 8,000. I think that winds up being the floor here. I think anytime you're below the miners' average price of a new Bitcoin, that's a good accumulation area. It may not be the lowest accumulation area. It may go lower than that. Bitcoin's an incredibly volatile asset, but it's certainly a good place to start accumulating. So if you've been accumulating in here over the last few months, anything below 8,000 or so, you're doing good, because now you're set up for the next move higher. This low, if we close here above this high, this low in here gets confirmed. And at a minimum, we'll be trading between 8 and 10,000 for a couple of months before we go higher. But this could be the beginning of the next big move up. Okay? But we got a couple of weeks before we can confirm that. So let's keep watching it and see what happens. So, we can watch the weekly chart, but I wanted to show you the monthly chart today because the monthly chart's where the significant move is. Okay. Let's talk about the Dow. Let's talk about the dollar. So I mentioned earlier that I thought the dollar was getting off of its backside. Now, Martin Armstrong had really great commentary, I thought, coming into the end of the year, explaining the weakness in the dollar. And he said that there was just a lot of book squaring happening for a lot of fund managers in the euro, because the euro, started the year strong and ended the year weak. And there was a lot of, book squaring. That's the guys lifting hedges and resetting all their hedges and resetting their portfolio strategy. And they did a lot of that into the end of the year. And that means that they lifted a lot of euro shorts because they already made their money on their euro short. And so they had to kind of buy some euros and, go with the flow and reset their expectations for next year. And he said that the dollar should lift off of its, off of that low coming into the new year, because then the trades will start to reverse themselves, or people will start putting on new people will start putting on new positions, and yada, yada, yada. So once the book squaring is done, now you got the people now strategically setting themselves up for what they're going to do next year. And that happens in January, and it happens all across every market segment. It's just a good reminder. When Martin said it, it was like, oh, of course, that's what they're doing. Sometimes you get lost in all of the other stuff that happens. That's why you read other people, to remind you of the little things, just the little, very obvious things that you should know. But, you can't keep everything in your head all at once, right? So it was a great comment, and I appreciated it greatly. So this is a one-bar reversal signal this week. And you know damn well that the Fed and everybody were pumping absolute tons of money into the markets to try and keep this from breaking to the upside. Okay. And there was some furious dollar buying in this week's TIC report as well. So there you go. I will not be surprised to see this push higher. This is a one-bar reversal of this downtrend, right? This shouldn't be a surprise. We had a downtrend here, followed by a one-bar reversal that took weeks to break down. When it finally did break down, it did not violate this low. So we still have this uptrend of higher lows, higher highs, and then a low. But then, okay, so this we didn't break to a new high there coming into the end of the year, but we didn't break this low either. So now we've got the beginnings of a coiling pattern on the dollar. So look, the dollar's at 97, the trade weighted index is at 97, and the euro's trading at $1.11. Think about that for a second. The US dollar index could trade sideways and the euro could still break down to $1.05. There's not much room there for that to happen now. So just saying. All right. So watch this carefully. I think this high is the target for this week, and that's at 97.40. So a close above 97.40 on the USDX this week would be very significant, because it would not only would we get follow through on this reversal bar, but it would break significant resistance, near-term resistance here, setting up a move back towards 98 by the end of the month, or certainly by the first week in February. Okay, it's important. If that happens, oil is going to continue to crash, because if we do not keep the pressure on that we're going to somehow keep oil prices up, and I firmly believe that it's the United States and Saudi Arabia who want higher oil prices. It is not Russia. It is not Iran. It is not, certainly not China. It's not Iraq. It's not Venezuela. Any of those people. It's the United States and Saudi Arabia, because they are the two most exposed to low oil prices. The Saudis budget-wise, the United States frackers need higher prices in order to be able to sell into the market, and they want Brent crude pushed higher, and the spread between Brent crude and WTI pushed wider, so that WTI trades at a greater discount to Brent, therefore making WTI exports more attractive. That's also part of Donald Trump's plan. He's trying to take market share, but he has to do so at the cost of billions in red ink. Hundreds of billions in red ink and unsustainable free cash flow losses. So we'll see. But this, I've been telling you for a long time now, and you guys have seen most of this previously, but it's always good to remind yourself, this was an ugly, ugly pattern, which back here, which, presaged when we did get a breakout here on the Houthis' attack on Aramco. We got a big spike, and then nothing happened because Trump would refuse to go to war, so it collapsed, and then slow burn higher. But somehow this 4-bar or 5-bar reversal signal was able to push us all the way to $70. Again, Saudi Aramco, IPO, blah, 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 blah. Someone's in here desperately trying to push the price of oil back above $75. This is a worrisome bar, being a bullish not reversal signal, but engulfing bar. And engulfing bars are never good. And then we get another one this week, and then we close below this low. So not only did we get the 5-bar uptrend with ever increasing highs and lows, like engulfing bar after engulfing bar, stacking on top of each other, but we also get a 1-bar reversal signal of this uptrend. Oil's going to $60, folks. If not $60, $55. If that continues to rise, oil doesn't have a chance. Okay? It just doesn't have a chance. So, trust me on this. This is a picture of intervention that is epic. And it's going to fail. Let's talk about the Dow. And if I'm wrong, to me, this call on oil, if I'm wrong on this, I don't know. I'd stake most of my reputation on this call on oil. Let's just put it that way. You guys are free to leave. And I don't know what the hell I'm talking about. All right. Let's talk about the Dow. All of a sudden, the Dow's directionalist. Look at this. Oh, I will grind higher. I will rule the world. Maybe. I'm sorry. Yeah, these bars here are not a good sign. There's going to be a correction in the Dow soon. It may even be this week. And if there's a correction in the Dow, again, when I showed you the NASDAQ a couple of weeks ago, all the markets are doing the same thing. For the most part, they're all following each other. The capital flows are all about... The markets at this point are all about international capital flows. They're not trading on fundamentals, guys. They're just not. The world is too freaking crazy to be worried about whether or not the S&P is trading at a P/E of 21 or 22. You know, like, look at the issues in the world today, and you think that people are really thinking about that. I mean, I've got some verbiage in this month's newsletter as to why I think the U.S. equity markets have continued to rally from a very simple perspective, but it is something for you to think about. So I think there's going to be some kind of correction here in the Dow. I don't know if it's going to be this week or next week, but it's coming. You can just see it in this. And if there's a move above this level after trading sideways for a few weeks and building kind of a base here at between 28.5 and 29,000, then we're going to blow off to the top, and then there's going to be a 15 or 18% correction, 20% correction in a day or 2 days. It'll be epic, just like we've seen in the past. Okay. Then the credit markets will come in. And the pensions will come in and they'll buy everything up and try and get their 7% yield in an afternoon. That's what I think is happening. All right. So that's what I got for the day, guys. I appreciate everybody sticking by me through this. And I appreciate you all at a level that I cannot adequately express. And we've got a lot of work ahead of us. And we got a lot of better getting to get on with. So I'm going to go do that. Get my workout that I owe you guys. You guys, enjoy your afternoon. Enjoy your weekend. And we'll talk on Wednesday. Be well. Keep your stick on the ice.
In this one of many possible worlds, all for the best or some bizarre test. It is what it is, and whatever. Time is still the infinite jest. The arrow flies when you dream. The hours tick away, the cells take away. The watchmaker keeps to his schemes. The hours tick away, they tick away.